Everyone in crypto keeps saying the same thing. This time it's different. They said it in 2017 with ICOs. They said it in 2021 with NFTs. And now they're saying it again with something called real-world asset tokenization. It sounds complicated, but it's actually simple. It means turning real things like bonds, houses, art, or gold into digital tokens that can move instantly around the world. No banks, no paperwork, just blockchain. So, is this the next big narrative or just another fancy buzzword? Let's find out in plain English. Think about it like this. The world runs on paper. Every bond, every real estate title, every share certificate, it's all just information written somewhere. When you buy a house, you don't carry the house in your pocket. You own a piece of paper that says you do. That's it. Now imagine that paper is replaced with a digital token that can be verified instantly, traded globally, and stored safely on a blockchain. That's the idea of tokenization, to take something old and slow and make it digital, transparent, and efficient. It's not just theory. Big players are already testing it. BlackRock, the world's largest asset manager, recently launched a tokenized fund called BUDL. It runs on the Ethereum network and represents real U.S. Treasury bonds. In other words, real money, not speculation. Franklin Templeton, another global giant, did the same thing. They tokenized part of their U.S. government bond fund and made it available on blockchain. So, the idea isn't coming, it's already here. But let's slow down and really understand what makes this interesting. Right now, the global bond market alone is worth over $100 trillion. That's more than all the world's stock markets combined. And most of it still moves using decades-old systems, full of intermediaries, delays, and fees. You buy a bond, it settles in 2 days. You move money internationally, it takes 3. In a world where you can send a message across the planet in 1 second, that makes no sense. Tokenization promises to change that. It takes an asset that used to be slow and illiquid and makes it move like crypto, fast, transparent, and global. So how does it work? Let's say you have a commercial building worth $10 million. Traditionally, only large investors could buy a piece of it through funds or REITs. But if you tokenize it, you can split that building into 10,000 digital shares. Each share becomes a token on the blockchain. Anyone with an internet connection can buy one. You just turned real estate into something as easy to trade as Bitcoin. And every transaction is recorded publicly, instantly, and securely. No notaries. No waiting for a signature. It's not just real estate. You can tokenize almost anything: gold, art, music royalties, even fine wine. As long as it has value, it can be represented digitally. The idea is to bring liquidity to things that were never liquid before. If you can trade stocks instantly, why not houses? Why not art? Why not bonds? Of course, it's not as easy as it sounds. Because when you deal with real assets, you deal with real regulations. Who owns the tokenized bond if the company behind it fails? Who ensures that the digital token actually represents a real asset in the real world? These questions aren't simple. That's why, right now, tokenization is still happening mostly inside permission systems, private blockchains managed by banks and financial institutions. It's a safer sandbox for them to experiment in. But even inside those walls, the technology is evolving fast. And the potential is massive. Imagine a world where you can buy $10 worth of a U.S. Treasury bond instantly from your phone, no matter where you live. No broker, no middleman, no minimum investment. Just click, confirm, and you own it. For billions of people who can't access global markets today, that's revolutionary. Tokenization could make investing as easy as streaming a song. Now, let's talk about what's really driving this movement: money efficiency. Institutions aren't going on-chain because they love crypto. They're doing it because it saves them time and billions in costs. When you use blockchain for settlement, trades clear instantly. No one needs to wait 2 days for confirmation. That means less risk, less paperwork, fewer mistakes. And for big banks, that means profit. They see what crypto built: instant settlement, transparent ledgers, unstoppable transactions, and they want the same thing, just without the chaos. There's another reason: liquidity. The more an asset can move, the more valuable it becomes. If you can sell a bond instantly, it's more useful than one stuck in a vault for months. Tokenization makes assets liquid by design. You can trade fractions, swap globally, and build new financial products on top of them automatically with smart contracts. That's a big deal. It's like turning every asset on Earth into Lego pieces that can connect with each other. Finance becomes programmable. But let's be honest, not everything about this is perfect. The biggest challenge is trust. If someone says a token is backed by real gold, how do you know the gold actually exists? You can verify code on a blockchain, but you can't verify a vault in Dubai or a warehouse in New York. There's always a trust bridge between digital and physical. That's why regulation, audits, and reliable custodians matter. Without them, tokenization is just another fancy word for IOU. Still, the direction is clear. We're moving from a financial world that's closed, slow, and exclusive to one that's open, instant, and global. And the biggest names in finance are already quietly building it. JP Morgan has its own tokenization platform called Onyx. Citi and HSBC are experimenting too. Even governments are watching closely because tokenized bonds could completely change how they raise debt. Instead of selling bonds through old banking channels, they could issue them directly on blockchain, reaching global investors instantly. Faster, cheaper, and more transparent. Here's the funny part. Crypto started as a rebellion against traditional finance, but now the same technology is being adopted by traditional finance to make itself better. It's ironic, but it also proves the point. Blockchain isn't about price charts. It's about infrastructure. It's the invisible layer that will run the next version of global markets. And when this happens, it won't feel like a revolution. It'll just feel normal. You won't even notice it. You'll buy a token that represents part of a fund, or a share of a building, or a piece of government debt, and it'll all happen quietly in the background. Just like how you don't think about how your credit card works when you pay online. That's the real power of tokenization. It disappears into everyday life. But let's set expectations straight. We're still early. Tokenization will take years to scale. It needs clear laws, better infrastructure, and user trust. There will be failures, scams, and setbacks, like every big idea before it. But once the systems are built and the rules are clear, it's hard to imagine the world going back. Because digital beats paper every time. So, will tokenization change everything? Yes, slowly. Just like the internet did. At first, people didn't understand what a website was. Then one day, everyone had one. Now, we don't even call it the internet economy. It's just the economy. The same thing will happen here. In 10 years, we won't say tokenized assets. We'll just say assets, because everything will be digital by default. So, next time you hear someone talking about RWA tokenization, like it's another trend, remember this. It's not hype. It's history catching up with technology. The world finally found a way to make finance move at the speed of information. That's what blockchain was always meant to do. Because once real assets go on-chain, finance will never look the same again.